Learn the art of investing on Moneywise.
Welcome back, everyone. How are you? You've got me, Ahalya, keeping you company on another Moneywise podcast. Excited to dive into an interesting conversation once again about how we can really reach our potential when it comes to our investment journeys and maximize, our investments through our varied portfolios. Today, we're actually going to be discussing a very important investment tool that should be used to your advantage. In fact, it has the word advantage in it. But we'll dive into that in just a minute. First, let me welcome our speaker for today, Sachin Relekar, Senior Fund Manager, Equity Bandhan Asset Management Company Limited. Hi, Sachin. Thank you for joining us today on Moneywise.
Hi.
All right. So, Sachin, like I said, I'll stop with the spoilers. I'll dive straight into it. But, just to set the context, I think this investment tool is particularly relevant to, current circumstances, right? We're in a fairly volatile market as of now. And a quote comes to mind by H. Jackson Brown Jr. When you can't change the direction of the wind, adjust your sails. And I think that when it applies to investments, right, that quote, markets can be affected by several factors, such as macroeconomic developments and global factors. And market volatility is inevitable. Unfortunately, we cannot control it. These things are out of our hands. But that doesn't mean our investments need to be hindered, right, in the process. So tell us a little bit about this tool that can actually help us reduce some downside when the market's correct.
Absolutely. So as you said, market and the prices do get affected by various things. Macros, sometimes sentiments also play a big role into that.
Right.
Market is about people, and therefore there is sentiments around it. At times they tend to become very positive, and at times they tend to become very depressed as well. So that can have a lot of impact, which is way away from the fundamentals. The idea of balanced advantage fund is how do we cushion the journey of an investor over a long period of time, wherein the volatility impact can be smoothened. So I think that is important, and therefore this dynamic asset allocation thing comes into the play, wherein you're trying to cushion the downside, and at the same time it also tries to take advantage of that sentimental factor also. So that is the mid golden mean sort of what is this tool is trying to achieve, and that actually helps the investors to tolerate this volatility, interim volatility, and at the same time keep the long-term goals, long-term financials goals rather intact.
Nice. Okay. No wonder it's called a balanced advantage fund because, it really does allow you to reach that balance, and that's quite advantageous for all of us investors. But, it's quite interesting. What is the strategy used by these balanced advantage funds? How exactly does the whole thing work?
So the basic tenet is, as I said, there are extremes. Equity being a long-term asset class, there are extremes which do get affected into the prices. That is where the volatility part comes in. Volatility not necessarily is a risk. The risk is basically the permanent loss of capital. So what happens is because of this volatile movement, people's actions also get impacted. What strategy over here is you try to negate those factors wherein those volatile periods in the market should not affect your wealth creation or the wealth goals. That is actually the strategy. Strategy is based on then you try to see through these volatile periods through the fundamental lenses, saying that what should affect the long-term prices of the equities, and if those long-term prices are not in sync with what is the current market prices are, that is where you try to fine tune. But this is applied on a broader market per se, wherein we are trying to understand the volatile technical factors. We are trying to understand the impact of the macro factors, trying to also incorporate the company specific factors into this. If you combine all these things together, that is where you try to cushion the, as I said, the volatility part of the market movements per se. That is actually the nutshell of the ingredients of the strategy per se.
So, on the face of it, it seems like there is the biggest advantage of actually keeping your investment safe, right? And reducing the risk as much as possible, or the losses as much as possible. But are there, more nuances to the benefits of using this tool? Does it go a little deeper than just, risk appetite?
It goes deeper than just the risk appetite, because it's not just about containing your drawdowns. It's also about adding more exposure when actually the prices are more attractive. So one is it has to cushion the downside, and it also has to participate in the upside appreciably. It is just not a defensive way of investing. It is also aggressive at times, and basically it is trying to take advantage of extremes on both the sides. So that is actually the purpose, or that is actually the end game here.
Nice. So what are some of those other benefits, if you could sort of run us through that?
So their benefits are many. I mean, first of all, there is a professional expertise involved into this. This is an equity fund house as well. I mean, this is a mutual fund. We have a deep expertise in equity management. So that is a professional expertise which comes into the managing the equity portion of the fund. Second is the dynamic asset allocation, which is what our starting point was, wherein we are incorporating all the, much more holistic way of what affects the capital market per se. We are looking at what is happening to the credit spreads. We are trying to incorporate what is the volatility indices are saying. We are also looking at the valuation measures over here. So all those things comes into the play to achieve that dynamic asset allocation optimal levels. Then in terms of portfolio, which comes in an equity portfolio, that also is quite diversified in nature. So it's not skewed toward just one set of a market capitalization. That diversification or the diversified nature of the equity basket itself gives the advantage that it can also, incorporate several trends which are there in the equity markets. And then finally, which is a legal thing, which is a taxation benefit. While there is a component of fixed income portion into this fund, which is again plays a part of cushioning the downside, because that is much more predictable in terms of the return profile per se compared to equity. But it also gives an equity taxation, because at all points in time, the equity allocation in the fund will always be more than 65% or 65% plus. So that taxation benefit also is there. So it has a smoother return profile, but it has an equity taxation also. So 4 important things. One is like professional expertise, dynamic asset allocation, diversified portfolio, and finally is the taxation benefit. So those 4 things are like very important benefits I think investor can look forward to.
You're listening to Moneywise, successful investment ideas that create wealth. Did you know?
Hybrid mutual fund schemes are once again attracting the attention of investors. According to AMFI data, the June 2023 quarter saw an investment of 14,000 crore rupees in hybrid mutual funds compared to the inflow of 10,084 crore rupees in the April-June quarter of 2022.
Personal Finance Simplified, only on Moneywise.
Is there, any chance that this can also, you did mention at the beginning of our conversation, that there's a lot of human sentiment involved when it comes to investing, and that is something we need to be cognizant of. So can it also help manage that in any way?
Yeah, because that's where we are putting in that discipline, right? I mean, what is the underlying model which is pointing toward this? So it actually captures the complacency of an behavior at times. It also captures the extreme pessimism of the behavior at times. So in times of extreme complacency, it will try to curb down your enthusiasm through the model discipline itself. And it will also encourage you to take more exposure at the time of maximum pessimism which is there. So that emotional bias also gets overcome because of the disciplined approach which is there. That is what is incorporated here.
Thank you for walking us through that. I think that's probably a lesser looked at aspect of investing, right? We don't really think about how we can be rational investors. And I think that is very important if we are to maximize our potential. Given that this is an investment tool, Sachin, there are often, different personas of investors, right? With whom, particular tools work best. So when it comes to a balanced advantage fund, is there a specific group of investors that this would be particularly good for, or is it just a great tool for everyone to think about?
So As you said, there are different type of investors looking for different type of exposures. There is a risk appetite and there is a risk taking ability also, and it changes. It changes with each of the individual profile. If you are very long term horizon and if you have a lot of saving period which is ahead of you, perhaps your risk appetite as well as risk taking ability both are very high. At times, people does not have risk taking ability because of the lack of saving or too much of a dependency, but they individually might have a lot of risk appetite in that, or somebody might have actually a very good status in terms of the financial savings, etc. But it might, as an individual, he might not have a risk appetite. So it's basically a combination of these two things is where you have to figure out. For somebody who is having a moderate kind of a risk appetite, at the same time, the dependencies or his income profile is kind of or a conservative side. I think when those things come together, a moderate risk appetite and a moderate kind of a financial profile also, which is giving him a moderate risk taking ability. I think if these two things are there, then for that kind of investor, balanced advantage fund should do an ideal job. At the same time, some people might have actually a better financial profile. They might have enough savings, etc., and they perhaps are not having too many dependencies on them. But at the same time, their income profile or somebody who is like a retired person, he might not have a growing income profile. For him, this product also can do a good job because for him, the predictability is also important. It's not just about compounding of wealth. So in those cases, the product actually makes a lot of sense. So that is actually, it needs to be considered as to where we are looking for. Also, some of the first time investors who are not exposed to equity asset class or even mutual fund they are new to, in their cases, the experience of investing is very less. And while they can have a long horizon, but for them to onboard and have an experience of how the mutual fund works, what kind of return profile they can generate, all those things, actually once they start experiencing, for them onboarding for first few years, they can actually start with balanced advantage fund.
All right. And finally, to end the conversation today, Sachin, a question for you, given that you have sort of an insider view for us. How does Bandhan Mutual Fund actually manage its balanced advantage funds?
So up till now, we had this fund which has a lot of emphasis on a valuation as a tool to manage our asset allocation. Now what we have done is we have expanded the scope of model. We said we should also look at factors which will give us more comprehensive view of the capital markets per se, or incorporate the factors which are impacting the equity prices over a longer period of time. So what we looked at is we incorporated the valuation parameter for sure. We also incorporated the fundamental factors. We looked at the return profile generated over a period of time. We also looked at volatility index part of it. Volatility basically is a sentiment indicator. And then we looked at some of the technical factors. We are also looking at factors coming from the fixed income parts of the capital market, because equity markets does not exist in a standalone fashion or in vacuum. They do have an impact coming from the fixed income portion of the capital market as well. So most of those things we combine together, and we kind of believe that it is much more holistic and much more balanced approach to determine what should determine our equity allocation.
All right. That's a pretty comprehensive strategy and a pretty comprehensive deep dive that you've given us today, Sachin. Thank you so much for really opening our eyes to this tool. I think it is a very, notable one for us to at least pay attention to, and then we can figure out if it's for us or not. But definitely something that can support and aid the investment journey. So thanks for your insights on today's Moneywise.
Thank you for hosting us.
Perfect. Everyone, I'll catch you on the next podcast. We should be back shortly with another interesting conversation in the area of investments and how to get a little wise with our money. But until then, happy investing and stay safe.
You're listening to Moneywise, brought to you by Bandhan Mutual Fund. Check out the rest of our series for more insights on investment and personal finance. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. The scheme name is Bandhan Balanced Advantage Fund, an open-ended dynamic asset allocation fund. This product is suitable for investors who are seeking to create wealth over long-term, dynamic allocation towards equity, derivatives, debt and money market instruments. The scheme risk-o-meter is moderately high. investors understand that their principal will be at moderately high risk. The benchmark is Nifty 50 Hybrid Composite Debt 50:50 Index. The benchmark risk-o-meter is high. Investors should consult their financial advisors if in doubt whether the product is suitable for them.